Welcome to my next video. In this video, we will talk about how to be a better investor. Specifically, we will talk about investment risk and investment return. This video is part of a 6-part series of videos on how to be a better investor. I highly recommend that before you take any actions based on this video alone, you first check out all the videos in the series. But first, what I say in this video is based upon my education, my life experiences, and my set of values. What I say is for typical people in typical situations. It is not for all people in all situations. If it was, this video would be hours or even days long. My goal and hope is that by the end of this video, you will know more about how to invest so that you can make better decisions for your life. First, let's talk about some definitions of investment terms. Investment risk generally means the risk that your investment will go down in value. Investment return generally means how much your investments go up or down in value. Here are some very important things to know about investing. Generally, if you want to have higher investment returns, you also have to take higher investment risks. Also, generally, if you want lower investment risks, you're probably going to end up with lower investment returns. In investing, like life, there's a trade-off between risk and return. Now, you can take tests that will allegedly measure how you really feel about investment risk. These tests do work for some people, but many of us lie when we take these tests. In our culture, we tend to glorify bold risk takers. Plus, you just learned that if you want higher investment returns, you have to take higher investment risks. And who doesn't want higher investment returns? But the reality is that most of us, most of the time, do not like taking risks. Most of us, most of the time, do not want bad things happening in our life. There are a number of great sayings about investing. One of my favorites is, if you don't know who you are, investing is an expensive way to find out. What that means is if you think you are fine with more investment risk than you really are, guess when you figure this out? When times are good and your investments have gone way up in value? No. You figure this out at the worst possible time, when times are bad and your investments have gone way down in value. And what do you do when you finally figure out how you really feel about investment risk? You probably sell your investments for a big loss at the worst possible time. It's important to understand how you really feel about investment risk. So, we have investment risk and we have investment return. Which one should we figure out first? I highly recommend that you figure out your investment risk first. Why? Because if we figure out the investment return first, the investment return that we need to accomplish our goals that we want to accomplish, and then we check the investment risk, there's just too much of a temptation to say, oh yeah, of course, yeah, whatever that investment risk is, I'm cool with that. That'll get me to my goals. I highly recommend you first figure out how much investment risk you are really, truly, honestly comfortable with. Then see how much investment return you normally get over time for that amount of investment risk. Then see if this investment return is enough for you to accomplish your goals. every once in a while, it is enough. If that happens to you, great. You're done. Normally what happens is the investment risk is not enough for you to accomplish your goals. What then? Well, you have a tough decision to make. But you are the best person in the world to figure out that decision. No outside financial expert can understand how you look at the trade-off between investment risk and investment return as well as you can. Your choices are to increase your investment risk beyond the point you are really totally comfortable with, and/or accept that with a lower investment return, you will likely have less money and will not accomplish the same goal you wanted to. I said that generally, if you want to have higher investment returns, you have to take higher investment risk. But there are some exceptions to this general rule that can be really good for you. One of these exceptions is when you routinely carry a balance on your credit cards. If you have some cash you're looking to invest, you might be able to get a big investment return you cannot get elsewhere by just paying down the balance on your credit cards. For example, let's say that you're carrying a balance on your credit card and the interest rate you are being charged is 15%. If you have cash to invest and you use this cash to pay down the balance on your credit card, what's your investment return? 15%. What about the risk? There is no risk. You're going to get 15%. Paying down the balance on your credit cards can be a great investment for you. Another thing is if your employer matches the contributions from you to your pension plan. For example, let's say your employer matches 25% of whatever you put into your pension plan. If you put money into your pension plan, you get an immediate 25% return from your employer's contribution. If, and this is a big if, you are what is called fully vested in your pension plan. You're always entitled to anything that comes from you that you put into your employer's pension plan. You're always entitled to that when you leave. But depending on how many years you've been there, if you leave your employer, you may or may not be entitled to what your employer put into your pension plan. It depends on how many years you work there. I highly recommend that you investigate your pension plan vesting rules if you're interested in this. Once you have been there long enough and are what is called fully vested, you also get all of your employer's matching contributions when you leave. In my example, if you're fully vested, you get an immediate 25% return for anything you contribute to your pension plan. This can be another great investment for you. In this video, we learn more about how to invest. Specifically, we learn more about investment risk and investment return. This video is the second part of a 6-part series of videos on how to be a better investor. If you want to learn more, be sure to check out the other videos in this series and my other videos on many other topics. Until the next video, always remember that you are the best person in the world to decide what is important in your life. Thank you for watching. Please click the button to subscribe. I hope that you got something from this video. If you did, please give it a thumbs up and comment. Please check out my channel, playlists, and other videos. Have a great day.